The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi, folks. Just real quickly, let me say the 1 minute ESZ22, that's the December contract of the E-mini, should try for the 39.72, 39.74 level very quickly. Oh, in fact, as I'm talking, it's gone to 39.71 in this cup formation just throughout, since early, actually from last night, that these patterns with the cup formation and the arch formation. Remember, I talk about the sine wave where you get the flow of an arch, and then it turns around and comes back as a cup, and then you get the arch, and just keeps doing it. It can make lower lows and lower highs, or higher highs and higher lows, but it's got the same pattern. It's the symmetry. Look at this. Look at how many of the symmetry I was talking about yesterday. I demonstrated the bar symmetry. It's quite remarkable how that happens. Now we're looking at, so here we are, B. This is going at 371. We'll see what happens. But in the meantime, let me just show you this as well. I wonder if it's working. Did I type? I typed it on the chart. I'll do it right here. And then we'll get to the show because I've got a ton of things. We're going to make it real easy today. GC is the gold contract. Look at this beautiful cup formation, the symmetry between the bar numbers, the number of bars on the left side from that peak D in the Chapman wave. You always anticipate a peak D. If there's a buy signal to a buy mode, at least a D, 4 higher peaks. Look at that. You got the same thing at about 8 this morning. The 1 minute GC continuous contract chart, then you got it again at 9:10. And now you've got it again at 9:55, but it actually extended up to a peak F in the gold contract. Gold is up 11 at 1766. It's kind of chopping around in a, here's the 200 period. You see this orange line? Isn't that incredible how it's just been a magnet and has been a repellent and a propellant as it drags the price closer to it? Now it's trying to get above it. If a gold, the continuous contract, can get above 17, if it can close for 2 bars out of 3, in other words, 2 minutes out of 3 minutes, if it can close above 1770 at any point, that'll be a nice trend change to the gold contract. Look at this peak D in the 10-minute chart of gold. Look at that beautiful symmetry. Well, let me just open it up so you can see it. Right here, there's a peak D, and then it started a brand new buy signal to buy mode, going to another peak D with a double top. You know how I like to measure left side highs to the right side retest. I'm doing this now because I'm going to talk about that a lot. Stocks from Goldman Sachs, just on and on and on. I'll show you how many stocks have made exact, almost to the penny, tops in recent, over the last week or so. And look, here we are. So it pulls back because that was technically much weaker at 7 o'clock, just after 7, the retest of the highs. So it came back down. It did the left side, right side price time or bar symmetry move. 2 bars late, and it came right into the 1760 area. Now it's trying to rally. All right, let's just get out of this because there's a lot to talk about. And I know some of you would rather get a picture of the stocks. Many of you don't trade futures, but this happened to be futures. Could have been anything. As long as it moves, we can chart it. All right, here we go. The Dow, the chart you're looking at here is FCX, Freeport McMoran, in copper. Made a peak C in the monthly chart, had quite a sharp pullback, but that C is still active. I can't make any other flat tops to give it a Chapman wave phantom peak. So at this particular point, that is a peak C, and it's gone from the 50, 52 area down to 25, got cut in half, and now it's trying to rally back. But look at this pattern. A peak F, it's usually a red plus sign. I haven't yet put the down arrow because I haven't got any confirmation of the, so this is copper, right? So it pulls back, trough A, on the way up, it's peaks, on the way down, it's troughs, peak A, peak B, trough A, trough B, trough C, pops up to a peak A, and now it's kind of stalling. If it takes out this left side low of the 21st of November at 35.12, then the 200-period moving average of 34.28 becomes the focus. And the reason why I mention it is because, you know what I always do, I draw it from the high to the low. I draw a rectangle. This is a wide rectangle formation, and it can have a cup pattern or a V-shaped pattern going back to or just under or just above the previous high. And if it does that in a very quick move and making higher highs and higher lows, that's always very good, because then it means that it's got a sustainable rally. But you need the technicals. In this case, the 9 is above the 14. That's good. MACD's weak, stochastic's weak, on balance is weak. It's only the 9 over the 14 that's really supporting it. But my guess is that it is going to slip. And if it goes under 30, right here, if it goes under 36, it'll do all the retesting that we're looking at and going to 34. At a peak D in the weekly chart, way under the previous peaks. That's usually a sign that says be careful. It could be some kind of a consolidation. Anyway, I wanted to do that because I'm going to go to high-grade copper. Almost the same thing, except this is a peak F, way above the 200-period moving average, then way below, even testing the 50-period exponential moving average. And yesterday going to today, the 9 has just slipped under the 14-period moving average. MACD is weak, stochastic is weak. It says to me copper is in a digestive phase, going back into the rectangle formation of the weekly chart, having gone back to a peak D. Now, I have to mention this because in this particular pattern, the Chapman wave methodology, if there is a close on a weekly basis below $3.50, the midpoint of this rectangle, be careful, because not only could it retest the lows in the 320 area, it could go below it. That makes any rebound at this particular point really, really important. Okay, I've got all that out the way. Here we go. The Dow. Dow made an alternate count G/C. It's a peak F in the 120-minute chart at 34,262. We are long from way down. You can see way down there, under 30,000. I don't want to do anything with that long position. We've taken little bits off for profit taking, money management. We've got the UDOW. That's a little different because that's 3 times long. We've taken a little bit more out of that position, but we still have a really good core position, and I want to hold that. So as a result, we went short a different index at the open before the open yesterday, and within that context, what I am looking at is I suspect that this is at least a near-term, not even a short-term yet, but a near-term reversal that could go from a reversal to a sell signal, not yet a sell mode. A lot more has to happen for that to happen. Look, the 89% in the stochastic, that's really good action. So this is a digestive phase. Look at the S&P. S&P, G/C, it's getting closer and closer to looking more like a G than a C. In the Chapman wave methodology, there was a 2-bar reversal. Actually, let me do this. I showed my subscribers today in the opening call newsletter. This chart right here of the SPY. The SPY made a 2-bar reversal. This is called Chapman wave 2-bar reversal. We're at a potential turnaround in the trend on a shorter-term basis. Starts off on a shorter-term basis. There is a fractional lower high in a bar that could be a G, or in this case, a reversal of consequences at 402.93. But until it starts to trade under 393, this is at least the start of some kind of a turn, no more than that. I'll be back in a moment. Basil Chapman, Tiger Technicians Hour. Dow's down 30.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, so the S&P 120-minute chart also made a peak C1, C2. That acts like a T and it's pulled back very sharply. Here's the Chapman wave inside wedge target support line. And so far, it's in the low range, testing the 120-minute chart's 50-period exponential moving average. All right, now let's do a couple of other things here. We'll do this real quickly. QQQ trading. Let's see, it's down 36 cents at 282.35. Most important about this is that there's the pattern that I was talking about. It made a trough A and then a trough B, right on the 14, the black 14-period exponential moving average. It bounces up and makes a gray A. Gray meaning it's not an official. Blue means that it's pretty much going to go to a D or higher. A says it's under the previous high and it's in a retracement area that could fail, and that's exactly where it is. And it just says if there is a close under 280.46, a close that is, it's at 282.26 right now. 282.26. I misread that? 280.46, yeah. If there's a close under that, immediately it goes from a sell signal to a sell mode in the daily. That's the QQs, and you can see the 200-period moving average. No, that wasn't the 200. Yes, that's in the weekly chart. You can see the pink 14-period moving average underneath say that again. The pink 9-period exponential moving average under the 14-period moving average, right on this little cusp of everything, where you've got the Chapman wave inside track repellent zone, you've got the negativity of the 9 under the 14. MACD is good, stochastic is very weak at 39%. On balance volume is non-existent. It is just flat. That's usually not a very good sign. So it says that the Qs are struggling at this particular point. Looking at the IWM, the Russell 2000. The Russell 2000 is right on the 14-period moving average, up $1.44 at 183.28. It's the same pattern. This went to, in the Chapman wave methodology, let me just show you this here. There it is. In the, let me go to my, can I see it? Nope, it's not that. There it is. So within that context of straight line, up or down, cup formation or arch formation, what we're looking at is when you have an H pattern that goes to a peak, rallies to a peak A or a B, and then fails, takes out that left side low. Watch out, it can go a lot deeper. And it can also become an M formation. Lowercase h goes to a lowercase m. But in this particular instance, we're watching it closely, because if there is a close underneath the daily chart, the 17th of November low of 180.51, that, again, also goes to a sell signal, probably a sell mode as well, being repelled at the 200-period moving average. Let me get to this. Now we can look at gold. Gold has had a rally of 13 points at 1768 from the 14-period exponential moving average. Yes, it does look like a leg A and then a peak A if there's no new high today. And this peak B has all the characteristics of a D, but it is a B. There's no other way to count it. And a B usually says it's positive until you start to take out key support. And that key support will be the low of the 23rd of November, the continuous contract of 1733.4. The close below that says, uh-oh, it's giving back a lot more than it should. But if you look at the weekly chart, it is so close. If there is a rally to the 200-period moving average, the daily 1789 level, there's a really good chance that the weekly chart, it has to close there on Friday, but the weekly chart could have, for the very first time since it went negative back in, was that May? Yeah, May, the week of 20th of May, it went negative in the 1887 area, 1824, sorry. That's where it went negative and crossed negative, and it's been negative ever since. If that finally goes positive, that's going to be a really good thing for gold, and it'll probably be a good thing because the dollar will be pulling back a little more, maybe help the market. Okay, within that context, the silver, I'm spending too long on this. Silver is holding very nicely at the 200 period. It's like a magnet at this 200 period moving average. If silver closes under 20.50, that's very negative. If it closes above 21.90, let's call it 22.10. That'll be a good sign. Say it could make a cup formation going towards the previous high. I did copper. Let me just quickly do the crude oil. Crude oil is having a very nice rally here, going to the pink 9-period moving average, but it's been making lower lows and lower highs. It has this dreaded H pattern in the weekly chart. It has retested the exact low of 74.73 in the continuous contract, and 74.73 was the week of the 30th of September. And yesterday it went to 73.60. I mean, really, 74.73 to 73.60. Not bad, huh? So there's your arch formation. Does it become a U-shaped pattern for crude oil to start moving higher? Well, we'll see. And just finally, the TLT has been going higher, meaning it's gone to a peak E, went to the D that we were anticipating in this bar symmetry right here. It did it perfectly within one session ahead of time, and then it even went to an E, and now it's pulled back a little bit. Maybe this is where we start to see the yields just for the moment start to rally a tad. I don't know, but they've done very nicely by pulling back. Now, within that context, what I'm looking at is, okay, here we go. So a whole bunch of questions. Let me do this. So there are double tops. SLX, yeah, SLX went to 60.94 around about the 14th or 15th of November, goes to 51 round number yesterday, and today it's at 51.3060. Is that a 5? Oh, that was a 61 round number high yesterday, and today's gone fractionally higher. So in a sense, what happens sometimes is that double tops, if the technicals are still very strong, it ain't a double top because it's extending. So now what I like to do is to draw in a trend line like this, like that, and it says, look, it's just broken above the Chapman wave inside track repellent zone. Let's see what happens after this, but I am calling it a leg E. There's no alternate count just yet. So E in the SLX, that's one potential double top that didn't work, or at least it could still work. It'll be a triple top, but at this point it isn't. ASML, this is ASML, is ASML Holdings. I think this is in, is this a semiconductor? I think it could be. Makes a high on the 15th of 608.32 makes a high on the 23rd of 600, makes a high of 608.32, makes a high on the 23rd of November at 610, round number high, and it's trading at 585. I'm just watching this really closely because if they survive this potential for some kind of a double top formation, that becomes very bullish. So that we will quickly, that's the reason why I didn't want to get out of our long positions, but add an index as a short, which has worked really well yesterday, obviously, is because I wanted this to be looking at each particular sector individually. Look at JP Morgan, makes a high of 136.17 on the 11th, and 3 days ago it makes a high of 137.14. Less than $1. I mean, this is amazing, right? But it's holding quite well today. So I'm going to go through some of these stuff. Got a lot to do. Be right back. Dow's up 8 now. S&P's up. Basil Chapman.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Folks, while I was doing this, I got a question. When I look at AMC, AMC is AMC Entertainment. It had a move from $1.91 back in 2021, I believe it was. That can't be an A because that was the low bar. So you have to move to the right because you haven't made a trough yet. You only make a trough when the right side has a higher low. Then you're making a little turnaround. So that's your peak A. But it went to an A and then did the Eiffel Tower straight up, straight down move. Looks like an uppercase A failure pattern. It hasn't taken out the low. It's gone down to the 5s, spikes up to the 840 area, and then it's pulling back. Now, the fact that you see what happens with this particular single leg A to the upside. In fact, didn't we just get that this morning? We got that right here. Yes, it happens all the time. It doesn't matter what what time frame you're looking at. Oh, yes, gold. Look, A, peak B, peak C, and it's in leg D right now in the 1 minute chart. I was going to do this live, and then I decided there's so much going on. Pity. But I wanted to show the V-shaped pattern where the number of bars to the left side could match the number of bars on the right side, but it did even a quicker time. We'll get to that. In the meantime, I wanted to show you the pattern ESZ22. There it is. Oops. Peak D, leg D. Okay, here we go. I have to do this. Give me a second. And look at the way gold, from the time it went positive at about 10:05 this morning and crossed positive, it's been positive all the way. And I meant to mention this yesterday. I'm so embarrassed about this. During my show yesterday, I was going to say, I've been working for a long time now, trying to identify potential days that are 2-click days. I call them 2-click days. I had it down from Sunday night, but I didn't follow through with it because I was I got distracted. The family was here, and I just didn't do this. But either Sunday night or when I was doing my show, a little after my show, I showed the top in the ESZ22. Here we go. I wanted to show this right here. I'll have to move all the way over. So the single leg A this morning was at there, single leg A, but then it held steady until it broke down. I wanted to show you this as a pattern that you need to look at. Can I show this? Will I get there? What I wanted to show from yesterday was, when is yesterday? Yesterday was that Sunday night? Well, I don't want to go into it. But yesterday during my show, I had the chance to say to you, this looks like a 2-click day. You click once for shorting, and at the end of the day, you click, or as close to the end of the day as possible, you get out. You get out, and that's your, there would have been a 60-something point session. I love those. Now, what I wanted to do this morning was to say, although I think it's a counter trend, I think there's enough energy to the upside from yesterday's huge move that maybe we've got a partial 2-click day. Darn, I was in the process, and even gave me an opportunity in the show to say that there's a chance that there's enough upside, not big points, but enough upside action just as a counter trend today to have your 2-click session. So I'm going to make a big deal about the 2-click session because I have not wanted to do an all-day webinar until I've been very comfortable, not just with discussing it, but with demonstrating what you look for, how you look for it, etc. And it'll be called a 2-click session. So with that said, let me get out of this because I've been talking about 39.72 to 39.74. Well, we just popped to 39.82 in the 1 minute E-mini. I think it's going to be choppy, but we've done a lot of downside testing after yesterday, so I think there's a chance of going higher. So where was I? I wanted to show this particular chart, and the reason why I moved away is I like to look at examples to demonstrate. So you remember the peak A that went sideways earlier this morning in the 1 minute chart before it broke down? So what do you look for? Well, in this particular case, the 9 is above the 14 in AMC daily chart. The MACD is good. Stochastic is under 80% at 73, but flat, which is okay. On balance volume is good. There is nothing to see in the weekly chart, and absolutely nothing than the tiniest little doji candle in a monthly chart in November, in October. Here we are in November with a wider doji candle. And the question was, will AMC go higher? I think that's the question. Let me just double check. Yeah. So within that context, I'm suggesting that the only way you can do this right now is to say that the technicals, the fact that for the second time it's tested the 14-period moving average, and now intraday, after a fairly weak opening in the general market, like the market itself, it's trying to come back, and it's at 744. If it's able, let's call it today's Tuesday, by Wednesday, If it hasn't taken our 719 support, but in fact is closer to the 758 area, maybe even 763, I'd say to you, I think you've identified correctly that this consolidation pattern here has the potential for a U-shaped formation. Whoops, did it take out? No, it didn't. The low of 705 on the 21st, today's low is 708. I like that, but I'll only like it if it starts to get closer and closer to the 50-period moving average, which is at about, right now, it is at about 769. It's got to get real close, and all week it's got to be having, whatever the market does, it's got to ignore it, and it's got to be moving high. I think you've identified one with a potential to move against the grain because it's been decimated, and decimated stocks right now are starting to show some kind of residual strength. So we're watching that very closely. That's number one. And number two is, my rule of 136, this is used up way more than 6 bars as a consolidation after that peak A on the 14th at 720, at 835. So it has to almost re-trigger a brand new buy, and that buy will come in as a confirmation if the stochastic can go into touch 80% or higher. When it goes to 80 or 81%, I think you're on your way up. But I would be real careful, because if it goes under 7, I know that the way you've positioned it, you could go under 7, because as long as in another few days you're getting back to the 750, 760 area. But I'm just looking at it as risk reward. Okay, that's that question. Now, let me I don't want to miss out on these things. So I said I'd do that. So I didn't I just do Goldman Sachs? No, I didn't. So Goldman Sachs did 389.58 high early in November, and then 3 days ago did 389.44. But look, it's holding steady. So there is a chance, and I don't want to deny. That's the reason why I wanted to keep the long positions and have a completely separate short position and go 3 times short, because I want an acceleration there with the least amount of money that we could put in to get that kind of gain. And so Goldman Sachs, together with the IAI, which is look at this, the IAI, iShares Broker Dealer and Security ETF, 102.35, high around about the 13th of November, pulls back for 2 days and then goes peak A, peak B at 102.28. What is that? 28 is 14 pennies away from the previous high. No, what am I talking about? It's 7 pennies away, and now it's holding steady. These are the moves that need speed. So for this to be negated, you need to see it under 98, and you need to see it by Friday or Monday. I'll be back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi everyone, so we're looking at AIA, which is the iShares, but we are long there at 102.35, and then 8 sessions or 9 sessions later, it makes a 2-bar reversal at 102.28, 7 cents away from testing it, 8 cents away from making a new high, but it's holding well, and this is the pattern that has speed. In other words, for this to fail, this red candle needs to be followed very quickly. You can have one day of just sideways, but very quickly you got to go under, in this case 100, to break the 14-period moving average to do a retest of the bottom. So what I'm saying is that I'm treating this as a digestive phase. I'm not treating it as a bear market, a bear phase, or anything just yet. We were extremely overbought in many areas. Look at this, yeah, in the semiconductor. This is the move that I'm talking about. It goes to the 200-period moving average at peak E, Teradyne, Inc., Semis, TER is the symbol at 90.54, up 32 cents. Goes to a pullback. I always draw the rectangle. I just want to demonstrate this, the rectangle formation. Within that, you get a V-shaped pattern or a cup formation. And in this case, it's stalled. And when it stalls, there's a chance that you get 2 fighting patterns. The second pattern would be this, the dreaded H pattern. Remember the one I showed you, the red one I showed you a little earlier on? So it goes to peak A. And then the second peak B, starts to fail, but it hasn't failed yet. It's still a B. It hasn't taken out the left side low. But look how many times it's done that. And the weekly chart is still pretty weak, but it's holding okay. The 9 is just about to cross positive this week. We'll see if it does that. I'm looking forward to when the semis finally really get going and lead the markets higher. Let's see, Applied Materials is all in the semiconductor area. There's your peak E. Above the 200-period moving average, comes back under it and over it, goes to a peak and is starting to fail, but it hasn't broken down yet at 104.56. If it trades under 100, you've got yourself a failure pattern. A sell signal probably upgraded to a sell mode. Let me do the next one. Make your writing so you can read it, mister. GWW, there's the same thing. 612.96 was the high with the doji candle. Around about the 12th, about the 7th or 8th or so of November, pulls back to the 14-period moving average, goes to peak A and fails at 611.02, less than $2 away from the previous high, up in the 600s. And look, in the weekly chart, goes to peak C. It's had 3 weeks to take out this resistance, and it's still stalling here. So it's just a stalling. Granger WW, distributor of maintenance repair and operating MRO. It's supplies. That's the nickname. That's the abbreviation. That's the pseudonym. That's the acronym. So here we go with the MRO. Let's go to MRO itself, which is Marathon Oil. There's the pattern I'm talking about. The peak D, around about the November the 3rd or so, pulls back to the 14-period moving average, goes to peak A, gray A, and then that becomes an A minus in the dreaded H pattern, lowercase h pattern, takes out the left side low, and look where it is now. So this is what I'm talking about. I've been talking about this for weeks. I'm saying I'm anticipating there's a topping formation in Exxon and all these big oil companies, oil and oil-related companies, Marathon Oil, of course, independent explorer and producer of energy. XOM, here's XOM, hasn't broken down in the rectangle formation. The longer the rectangle formation lasts, it goes from a wide to a narrow rectangle with all the connotations in the Chapman wave of a narrow rectangle. It says that if it's gone to a peak D, be careful, because if it breaks halfway into the rectangle, there's a chance it's going to take out the left side low of the base of that rectangle. And I showed you the measured move the other day. The Exxon did 114.65 on the 8th of November. 5 days later, on the 14th, it goes to 114.64, 2 pennies lower. And then it has a really good pop the other day. It goes to 114.47 and then 114.51, another little double top. So it's holding really nicely in a rectangle formation. The weekly did a Chapman wave 2-bar reversal, but I'm suggesting to you that in the shorter term, even though looking out, I still see at some point crude oil is going to come back in demand. Right now, what we're looking at is there's a chance that Exxon, and that's what I was saying, I would not short it, but take a little bit off for money management when I kept getting asked about it. And now what I'm looking at is within the context of the weekly chart, the technicals are still very strong. So it's going to have to be the day that at some point out of the rectangle formation suddenly slides to 105. And then you can say, wow, now Exxon is finally having a digestive phase. That's that. NEO, I was asked about NEO. NEO, of course, this is a Chinese, NEO Inc., Chinese company, electric cars and vehicles, made a peak C at 66.99, just missed by a penny, making a round number high back in 2021, January, I think it was, and traded all the way down to the 8s. I mean, and look at this, a rectangle formation. So, if you're going to go for calls, it has to be really short term. You know what's going to happen? China is just out of the blue in the next few weeks, maybe early in January. It's just going to, no announcement, no nothing. All of a sudden, it starts to open up. But I don't know if it's going to do that in the near term. And when it does, that I think is going to help our market. Certainly, it will help the FXI. So just on a short-term basis at 10.80, NEO needs to get to 11.13 to say, I'm going to make the U-shaped pattern to try to get to the 11.68 level. 11s, mid-11s was the two highs that were made in early November. FXI, there's a chance that it's going to go to a leg D. Is the FXI, the China large cap ETF, suggesting to us that maybe some things in China are starting to open up without us realizing it? I don't know. But at 27.13 on the 15th, it peak C with a doji candle. This is the pattern you want to see with the stock we were looking at a little earlier for Dan in the Den, which was, of course, by now I've already forgotten it. No, it wasn't that. Anyway, the stock we were looking at in great detail. No, I can't find it. I'm just scrolling through Discord. I can't find it. Darn. Yeah, anyway, whatever it was, maybe I can find it here because it's still on the list. Let's see. No, I've already moved on. So no, I don't remember what it was, but it had the same character. AMC, that's it. AMC, look at the chart on the left, So it's got a little similarity here, except this has taken many, there it is, AMC's on its way. Congratulations, Dan, you had a really good positioning there. Now it's at 757. This is exactly what you want to see, and by Wednesday afternoon, if it can go above 774, the high of the 25th, that's exactly what you're looking at. So now what am I looking at? Of course, I've forgotten. I was looking at, it's one of those days. FXI. So FXI has had this consolidation, and it's also rallying, and it's had a gap up today. So FXI goes to a leg D in the daily chart. If it goes 27.14, 1 penny above that peak C high, it starts a leg D, and that'll be legs B in the weekly chart. I think I've covered a chunk of what I wanted to do. No. INFN. Let's do this on the break. Now, see, this is the one that failed. INFN and Panera.com. I'll talk about it when we get back.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, so a question came in about CFMS. This is conformist, does hip and knee replacements. Well, I can't tell you how many people I know that have had knees and hips. And wow, one in particular, he had knee op in January, and we were playing together late March, April. We were already playing, and now he's unbelievable. So, and I'm playing today with the first time in ages with all my friends. They had 2 knees done. First time I'm going to see him in a while. All right, so we're looking at the Dow only up 4, S&P's up 4. So this is what I've been saying. I think that the tide is changing here in the near term, and as a result, just let's have a quick look at the VIX. Did I do all the... No, I didn't even finish that. I'll continue tomorrow. No rush. The VIX index right now is trading down 25 cents at 21.96. One of the reasons why I say to subscribers, I don't really want to go for the UVXY because it's not behaving. It seems like the tide has turned for it. It's just not showing... there isn't that much interest these days in insurance. We haven't seen it yet. I think we will see it very soon, but we're not seeing it right now. And therefore, the position that we took 3 times short a particular index, I think that that's not the safest way. There's nothing safe about being 3 times short, but it's a better way to do it because we can control certain things that we can monitor. But the UVXY did a 300%. You know, one of my favorite measurements is a 300% extension to the downside from the high that was made at about 13 something. 13 on the UVX back on the 11th of October, 1374, and it went all the way down to 766 4 days ago. So there's a chance that this ProShares Ultra VIX short-term trading vehicle could have a decent bounce. Well, okay, with that said, Basil Chapman, I'll be back with Tom O'Brien later today. But in the meantime, check out my opening call. And as I said, we got long positions, but we actually did go long go long a 3 times short instrument yesterday morning before the open. I'll see you later on with Tom, otherwise tomorrow. Have a great day. Stay tuned for Steve and all the great programming coming up.